Well, good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Welcome, welcome, and welcome. Today's Tuesday. It's October 4th. It's about 8:21 in the morning, and the market's going to open in an hour and 9 minutes to be specific with you. Now, before I begin, I want to thank each and every one of you for posting comments, liking these videos, and subscribing to the YouTube channel. Please do so. If you post a comment, a real comment, I will respond. I will definitely respond. So I want to thank you for posting those comments. If you have questions, post them in the YouTube channel. I will respond. And if you have further questions, send me an email, support@marketgeeks.com. Now let's get into it. Now markets are up pretty good. 400 points on the Dow. NASDAQ is up 234 points. The market is hoping, and again, I'm using that word very, very cautiously, hoping that the Fed is going to pivot before the next rate hike. We had some Fed data come out earlier this week, the construction spending, the manufacturing index. It was weaker than expected. And we don't have a lot of reports this week, but the employment data this week, this is the last employment report before the Fed makes a decision whether they're going to raise rates again. So this is going to be a real important one. And another one is international trades and goods and services. And I'll get into that one more tomorrow. We're still in Tuesday. And today we have the factory orders, the JOLTS reports. They're not massive reports, but again, they may be able to swing the Fed's opinion somewhat into cooling off and not going all the way to 0.75 next time. But again, this is the last employment report before the Fed makes their announcement, so it's going to be a very important one. Now, the bond market, as I promised you, notice it's starting to go higher. Until I see the bond market back within this range, which would put the TLT, this is the 20-year plus TLT, tracks the long bond, I'd like to see it above the 1.9, 1.10 level. Till I see it above that level, I'm still going to anticipate us moving lower in the stock market. So to me, this is just a big, big bounce. One of the few things that's encouraging is volatility starting to subside. It looks like it peaked, and usually when it peaks out at these levels, it tends to really go down. So I am expecting a bullish market for the foreseeable future, meaning in the next couple of days. Let's talk about global economy, and then I'll swing back to price levels and give you the strongest sector, strongest stocks, weakest sector, weakest stocks, and all the good analysis that goes with it. So weak economic data, that's what I was talking about yesterday, raises hopes that the Federal Reserve might ease away aggressive interest rate hikes. Now, we've had numerous, probably 15 announcements where we had negative data and it didn't do anything. So I'm actually believing this was more of a technical bounce, and market analysts are just trying to put a rational reason why markets rallied. But the truth of the reason is the put-to-call ratio has been really crazy. I mean, look at that, crazy. Momentum levels were really, really crazy. So there's a really good technical reason for a bounce too. So don't always believe what they're telling you is the reason for the bounce. I think it's a technical bounce, and we had some weak data, and the Fed should pivot, but I don't really know if that was the reason for the bounce. Analysts love to put stories to give you an explanation between cause and effect. But the truth is we really don't know why the market's rallying so hard. And the news that came out yesterday wasn't like something really crazy. So to me, this is just a narrative, and be careful with these narratives. Markets are closed in Hong Kong and Shanghai for holidays. Now, on Monday, this is what I'm talking about. A report on U.S. manufacturing came in weaker than expected, along with data showing a drop in construction spending from July to August. Now, that's expected because interest rates are higher. People are cautious about construction right now. That suggests that the Federal Reserve might be able to ease off on raising interest rates to beat down the high inflation damaging household finances. Now, I'm glad that this author, and this is a perfect example, there's zero evidence. We have zero evidence aside from a rally that already happened before this report came out. This report came out in the open. The market was already high. So to me, this is just, again, an analyst just trying to curve fit information that's coming out to the narrative that they want to see. But honestly, I have no idea if this had anything to do with it at all. The bottom line is markets are rallying, and I don't know if this report suggests the Federal Reserve might able to ease off on raising rates. I think the sentiment is there, but I don't think it had anything to do with this report. I mean, maybe 5%, okay? So don't believe it was this report that just caused the Fed to have a second thought. This is just all narrative, okay? And it's important because a lot of people who are watching this, they don't understand that. They don't think that. They think, well, if somebody's writing it, it must be true. No. Remember, the market was high yesterday before this report came out. This report didn't come out till after the market even opened yesterday for about half an hour. And the market was already strong. So it sounds like bullshit to me. Excuse my language. The Fed has already pushed its key overnight interest rates to about 3.25, up from virtually zero as recently as March, and that's got most traders expecting it'll be a full percentage point higher by early next year. And that's great because that's priced into the market, and small caps are not budging on that news, and either is Cathie Woods. So look at the bond market, right? It broke, but look at the small caps, the Cathie stocks. Look at ARK funds. Look at that. It's still in that base. It's still in that base. And look at IWM. It hasn't broken down below that low, that pivot low, like the Dow did. So very, very, very important, the fact that small cap, see that? It didn't do that. Now the Dow's coming back in its fold. Well, at least we hope so. Anyway, let me continue this. Besides stocks, lower rates also boost prices for everything from cryptocurrencies to gold, which can suddenly look a bit more attractive when bonds are paying less. Well, bonds are starting to pay up. Our interest rates almost doubled in the last several months. The latest update on the U.S. job market comes out on Friday. Now, that's the one I was talking about, along with report on inflation. The job report is one of the most highly anticipated pieces of data on Wall Street each month, but in this time it's different because it says it right here. This will be the last job report before the Federal Reserve makes its next decision on interest rates, which is coming out November 2nd, right after Halloween. Continued strength will give the central banks more leeway to keep hiking. Traders say the likeliest move is fourth straight increase of a whopping 0.75 percentage point, triple the usual amount. Meanwhile, energy prices are moving a little bit higher, which is very, very, very good. I like that quite a bit. That's positive. Now, let me take you through some levels. As I mentioned, volatility is cooling off. Put the call ratios cooling off, but it's nowhere near. It's nowhere near. We're still oversold. We're nowhere near the safety zone. Let me show you that safety zone. This is where that safety zone is. As long as we stay up here in this area, we're still oversold, and the market has a lot more firepower to go to the upside. Now, sectors. Let's talk about before I get into it, momentum levels. Now, remember how I'm always showing you 20-day breakouts and 20-day breakdowns? Now, the market's up 400 points. It was up like 800 points yesterday. Look at the number of stocks making 20-day breakouts, 9. Hardly any, which means momentum levels are just now going back to neutral. There hasn't been any aggressive buying yet. So we haven't really started. We're just now getting out of the oversold territory. We haven't got into the overbought territory, not even close. So there's still a lot more firepower. Look at this. We're neutral here. Remember what I showed you? When this gets really hot, it gets to about 5, 6, 700, or this gets to about 6, 700. We're at 9 by 27. So there's virtually no upside or downside, real strong momentum yet. That rubber band is just very flat right now. Very important. So don't think it's too late to get into the stock market, because momentum levels are not overbought or oversold. They're very neutral. Look at that. 20-day breakdowns, 20-day breakdowns. Remember I showed you this was like 600 to 20 before we turned down, and then before we turned back up, it was like 700 here to 20 here. We're nowhere near there right now. So that's positive. It means we have a lot more to go. In terms of sectors, I'm liking energy, healthcare, utilities, but I would, because there's a higher increase of a recession now than there was, say, 3 months ago, I would now focus on healthcare. And on the bottom, I would still focus on communication services or tech. Nothing really changed there. So if you look at the strongest stocks, you will see that BIIB is now the pharmaceutical company. Also, you have Regeneron Pharmaceuticals and Cardinal Health, CAH. So any one of these, remember, there's 500 stocks, and we're looking at the top 3. So you got Lamb Weston, you got Cardinal, you got Regeneron, and you got BIIB. All of these are hot right now. Matter of fact, in small cap world, biotechs are breaking out. Let me show you this. This is the beauty of all of this. I can actually show you everything I'm talking about. Let me show you this. Here, look at this. Look at the Russells, and look at this. Bio, pharmaceuticals, therapeutics, hospitality, therapeutics, let's see, therapeutics, pharmaceuticals, healthcare, pharmaceuticals. Are you guys seeing what I'm seeing? Energies and pharmaceutical, hospitality, therapeutics, pharmaceuticals, plasma, bio, healthcare. They have least impact world economy. So the small cap biotechs are rallying. Therefore, we want to focus on large cap health. And it's not like we're really going down. We're only going to the second sector, and healthcare is a defensive sector. So we're not really breaking any rules here. And again, as I mentioned, these are the stocks that I'm really liking right now. The ones that are right up here, the Lamb Westons, the Cardinals, the BIIB, the pharmaceuticals. And by the way, Enphase is still the number one stock. Nothing changed. I said that like a month ago. But I digress. Pharmaceuticals. And on the downside, oh boy, Charter Communication. That's right. And Dish. Look at my smile on my face. Nothing changes, right? Dish, Charter Communications. If you wait for a little rally that we're seeing now and then short the heck out of these stocks, it really is a no-brainer. Let me move on to some levels. So we're now getting towards that juicy level on the Dow, the 30,000. We're at 29,479. If we can get above 30,000, 31,000, not even 31,000, if we can get above 30,000, we're looking a lot better. That's the main area. It's actually, to be specific with you, it's like around 30,050, okay? On the SPY, that level is, oh, we're already there on the SPY. Okay, we're already in there. That's great. And on the QQQ, let's see if we're back in there. So the only thing that's still out of that fold is the Dow. But this is very, very exciting because most of the sectors are now back in this area. And the bond market, let's see where the TLT levels are. It needs to go up a bit more. It needs to go up about 4 more points. But if we can get back up to this level, that would put us back into a choppiness world and away from a trending down world. And that would be very important. So far, I'm still bullish. Look for the Dow to go higher next few days. This may be a good week. And if anything, we can unload some of our long positions and we could start looking at some short positions before the end of the week. I was very hesitant to go short because the market has been so oversold. And as you could see right now, even by the number of stocks making 20-day breakouts and 20-day breakdowns, there's just not a lot of momentums yet in a stretched out level. The market is still very static right now, 927. There's no real crazy things going on yet. So this momentum level can really go. Now, folks, I'm going a little deeper on what's happening in the U.S. and global economy at noon Eastern time. And I love our special guest. To help me do that, I have our global stock market expert. Oh yeah, it's like that. Jeff Zananeri is joining me live today at noon for my VIP trade room. It's going to be a great session. Now, normally, you have to be a premium member to join these sessions, but I think it's important for everyone to understand what's happening in the economy, and what it means for the market. So let's just say not everything is rosy, especially when it comes to the state of the U.S. housing market. And Jeff's got his pulse. He's really good with global economy. That's his real strength. Like my strength is sectors and mechanical trading systems. He's really great at global economy. I mean, that's his forte. So you don't want to miss this critical session. It's completely free to join. You can ask questions. We're going to answer them live. Use the click link below to enter the room at noon today. It's going to be a very, very special session. Jeff Zananeri is joining us. I'm going to ask him all the questions I usually ask him on Tuesday, but you guys can join me and we'll be able to pick his brain. It's an amazing session. We'll get into it together. We'll talk about what the Fed has in store, our favorite stocks, our favorite sectors, our favorite indices, whether volatility is going up, what reports to follow. I'm getting excited and I'm already writing down all the questions I want to ask Jeff at noon today. So don't miss out. It's going to be a great session and I'll see you there. And remember, post comments in the YouTube channel below this video and I'll answer them. Like our channel, subscribe to them. It really helps drive traffic to our YouTube videos so that I don't spend 15 minutes a day doing these videos for nothing. I appreciate it. Thank you so much. Talk to you guys later. Any questions, email me, support@marketgeeks.com. Bye. Have a great, great day.